Welcome, everybody. Happy Thursday. Wow, the week is going by so fast. I'm super excited to be with you all here today. It's a hot day here in Seattle. I mean, almost record-breaking. But for today, I mean, it's hitting around 90, the high 90s today. But I'm excited to at least talk about our today's subject as I have my air conditioner going on full blast. The topic of today's discussion is a big one, because before I started today's presentation, I wanted to at least be able to get people lines of credit really fast. You know, one of our most popular courses here at Creditor Academy is called I Want Remedy Now. That is one of our courses. We have discharged millions and millions and millions of dollars worth of people's debt on our platform. So we're very excited that it's not only our most successful and most signed up for course, but also I want to bring you now to the next level, beyond I Want Remedy Now. This is why today's live YouTube presentation is about the 5 proven ways to get business credit approval fast. So I'm going to go over it in detail. Works 99% of the time. So I'm going to go through it step by step. But before I begin, I would like to say, if you have not subscribed to our YouTube channel, if you have not been a part of our private Facebook group, or all of our other social media platforms, or especially if you have not been a part of our masterclass here at Creditor Academy, please register, subscribe, and don't miss out all on the latest information. So without further ado, let's begin. I want to talk about why this class matters, because I'm going to show you how to get business credit approvals fast. Even if you're brand new to the game, most entrepreneurs believe that they need years in business before a bank or a lender will even consider them. But the truth is far more empowering, especially in the private. We're all about the private here at Creditor Academy. Everything you need to do in the private. That's why the information that you'll find here is not found anywhere else. There are funding programs, private lenders, and even traditional banks that will approve business in their first year, or even the first 60 to 90 days if you meet certain criteria. These criteria are not hidden, but they're rarely explained clearly, which is why so many private business owners with their business trust missed out. And what you're going to get today is the blueprint that aligns with how lenders actually underwrite their approvals, not just what you read in a generic blog. I've seen many of our Creditor Academy clients go from 0 to 50K in credit lines in just under 60 days. I'm not joking with you. I'm very serious. And they do that by putting the right steps into place. And you can do the same. The issue is that most of you either skip key steps or apply for credit too soon without looking prepared. Lenders are not just looking at your revenue. Actually, far from it. A lot of our clients that got those huge lines of credit had barely any revenue at all. Really what they're looking at is your organization, your system, your predictability as a borrower. And doesn't that just align with what's your story? If you can match their checklist, approvals become predictable. And by the end of today, you'll know exactly how to position your private business to make that happen. We're also going to talk about why the structure of your business matters more than most people think. And why I also want to really focus on today a PMA, a private membership association, can be a game changer for funding approvals because it presents as a private, organized, and independent entity. When banks see an entity with its own EIN, a real business address, and a functional website, and a separate bank account, they're more inclined to treat it as a credible borrower. Not on your personal side. On your personal side, there's too much risk, right? You're not, see, the difference between an individual borrowing and a business is, as an individual in your personal expenses, it's very limited. It's only to what you need to survive and provide for your family. But a business like a PMA, I mean, it can go into millions of dollars. And that's what we're going to talk about. This credibility is essential for getting approvals when you don't have any years of financial history. The goal here is to separate your business from your personal profile, so you're not trying every dollar of debt to your personal credit score. This is exactly how large corporations operate. They don't rely on their CEO's personal credit, and neither should you. We'll be covering how to set that up and why it matters in the eyes of lenders. The separation also creates leverage, allowing you to build multiple funding-ready entities over time. And what kind of time am I talking about? I'm talking 60 to 90 days. No problem. No problem. The class today will be broken down into 5 strategies, each one practical, proven, and immediately actionable. First, we'll discuss how to use a personal guarantee with a PMA strategically to bridge the gap between no credit history and strong approvals. Second, we'll talk about leveraging your PMA's business checking account to signal stability to lenders. And third, we'll look at how merchant processing can be used as an approval asset, especially when handling privately. And fourth, we'll cover why organized, lender-friendly accounting can accelerate your approvals. And then finally, and fifth, we'll discuss timing. Everything is about timing. Why acting during the right funding windows can mean the difference between approval and rejection. Every one of these steps builds on the others. So the more you implement, the stronger your overall profile becomes. It's important to understand that getting funding is not about luck. It's about preparation and presentation. If you apply without having the right foundational elements in place, you're likely to get rejected. And many do. Even if your business idea is strong, but if you take the time to align your profile with lender expectations, approvals become, like I said, predictable. Lenders want to lend. It's their business model, but they need to feel confident that you can and will pay them back. Confidence is built through documentation, organization, and a track record that matches your application. And you need to complete all those 3 in 60 to 90 days. Even if you don't yet have years of history, you can create a profile that makes you look like you're a solid bet. And that's the mindset you need to approach this with. Building the version of your business that lenders say yes to, and doing it all in the private. My challenge to you during this class is to listen actively and think about where you currently stand with each of these 5 strategies. As we go through them, identify which areas you've already set up correctly and which ones still need work. You don't need to have everything perfect right now. The point is to create a clear, action plan you can execute immediately after this session. And once you've mastered these strategies, you can duplicate the process for future business trusts, other PMAs, without starting from scratch. And that's how you scale faster and safer. With the foundation set, you'll be able to dive into our first strategy. Remember, everybody, the idea is to get out of the rat race. You don't want to be in the rat race. The 9-to-5 job that you're a slave to, that your wife is calling upon you every single day, or your husband, and saying, wow, when are we going to save enough to retire? When are we going to save enough to be able to put the kids through private school? When are we going to save enough to get a new car and all of that? You're talking about saving, saving, saving. You need to be thinking about, how do I use the banking cartel, as I would call it, in order to feed the lifestyle that you want to live. And that's what the private is all about, is learning how to be a private banker. So we're going to go all of that in detail. Let's start with number one, using a personal guarantee with a PMA strategically. A personal guarantee, or PG, is one of the fastest ways to secure funding when your business credit profile is still in its infancy. Essentially, it's you saying to a lender, if my business can't pay this back, I will. Many entrepreneurs shy away from this because they don't want to mix the personal and the business liability. But when paired with a PMA, you can limit the exposure while still getting the approvals. Let me explain. The PG acts as a temporary bridge, not a permanent setup. This means that you can use it to get initial funding, build your business credit profile, and then remove it once the lender trusts your business on its own. With a PMA in place, your operations and finances are separate from your personal estate, which gives you an added layer of protection. This isn't about taking reckless risks. I don't even like doing that myself, to be honest. It's about strategically opening the door to higher limits earlier, like I said, within that 60 to 90 days. Without a PG, most lenders will take, anywhere between 4, maybe even 5 months. You need a lot more structure. And actually, we teach that here at the Academy too. Maybe some of you are just like, Paul Michael, I don't want to do a personal guarantee whatsoever. I want to know what it takes to create a private entity like a business trust and build up the profile, build up to 200,000 in credit, and make sure that there's no risk from start to finish. We teach that too. But today I'm talking about the PMA, not a business trust, but a private membership association. And the reason why is because a private membership association is a private entity that is a nonprofit. Nonprofit organizations have to have, for most banks, a personal guarantee behind it. So what I'd rather do is teach you about, if you're going to use PGs and fund a business, how to at least do it halfway into the private, so then you give yourself an extra layer of protection. Okay? And this is strategic, very strategic, especially if you need capital now. But the reason why this works so well is because lenders have the underwriting guidelines that favor low risk. A new business without a credit history is a risk. But adding a PG changes that equation. It gives the lender a fallback option, and that often all they need to move forward with an approval. When you're operating through a PMA, the PG is tied to that entity's borrowing activity, which keeps the liability structured and separate from unrelated personal debts. This also gives you more control over how and when that PG is removed. For example, Many banks will reconsider a PG requirement anywhere between 6 to 12 months of on-time payments. This is why it's important to plan your application strategy strategically, so you can position yourself for the PG removal as soon as possible. In our real world examples of people who do our program through the academy, we make it very clear that we see clients with brand new PMAs and no prior credit history getting approval for 25 to 50 grand worth of trade lines with banks like 𝘄𝗲𝗯𝗀, Business Preferred, American Express Blue Business Plus, and Bank of America Business Advantage Cash Rewards simply by using a PG. These approval happen, like I said, in 60 to 90 days of entity setup because the profile was clean, the PG was in place, and the documentation was aligned. That's a power of combining the right structure with a strategic PG. And what do we do within the 6 to 12 month timeline after they got that 50? We remove the PG because now the PMA can stand on its own. So now you get all the benefits of the credit that you just built with none of the liability. That's why we need to make this work for you. The first step is to ensure your PMA is fully documented and operational. That means that your EIN, your dedicated business address, your business phone number, your bank account, and the PMA's name, that's what lenders want to see, that this is real, that it's a functioning entity, not just a paper setup. And once those are in place, you can start applying by funding using your PG. The goal with the PG is to use it as leverage, not long-term crutch. We got to plan for removal by building your business credit file in a parallel with your PG-backed accounts. Once you've proven your repayment reliability, you can refinance or renegotiate to drop the PG altogether. This leaves you with a strong, independent credit profile that stands on its own, which is the ultimate goal for scaling without personal liability. So what do we got to do? We got to leverage your PMA business checking account. That's the second thing, okay? The PMA business checking account is one of the most underestimated funding tools in existence. Lenders care about your revenue, but more importantly, they care about your banking history. When a bank underwrites a loan or a credit line, they often request that 3 to 6 months of business bank statements to verify stability, right? You've heard that before. These statements will tell them more than you might realize. They show how much money is flowing in, how regularly, and how responsible you manage it. Your account has a consistent deposits. It avoids overdrafts, and it shows a steady balance. You instantly appear less risky, even if you have low revenue in the beginning. Consistent deposits, even self-funded ones, right? A lot of you are already thinking that. What if I self-fund it? That's fine. That's fine. It at least signals activity. For example, if you deposit $300 to $500 monthly and keeping your account in good standing, that's what opens the doors to the lines of 10 to 50 grand in as little as 90 days. Many credit unions and community banks weigh this heavily in their decision making. The trick is to use your PMA account as a credibility tool from day one, even before you need funding. One major advantage of using a PMA bank account is that it's entirely separate from your personal account. This separation is so crucial because it keeps your personal finances from being scrutinized in the underwriting process. lenders see a clean standalone account with the business transactions, man, they're going to reduce their questions and speed up your approval. And having your PMA bank account with a lender that offers business credit products gives you an inside track. Like, yo, dog, I want a business credit card right now, please. And they'd be like, who are you? And I'm like, I'm a business. Well, I don't know if I want to give you this credit card right now. Well, what if I put a personal guarantee behind it? They'd be like, all right, dog, I'll do that. I'll do that all day long. And remember, with 𝗖𝗵𝗲𝗰𝗸 now, we discharge any personal credits lawfully with private processes, private administrative processes, to give you that perfect 750, 800 score. So now you got a 750, 800 score from 𝗖𝗵𝗲𝗰𝗸 now because we discharged it for you. And now you utilize that perfect score to give you the PG to power up the PMA. The PMA is the one that gets the business credit. And then in 6 months time frame, we remove the personal guarantee and the business now stands on its own. Ah, bada boom, bada bing. So now what are you going to spend 50 grand on? Huh? Have you ever thought about that? Let me tell you what you spend the 50 grand on. It's two things. One, it's to get out of the rat race. Invest in yourself. Invest in yourself. Okay? Invest in what you want your future to be. The second thing is pay your personal bills. No one goes into business brand new and says to themselves, oh, I don't have any personal bills anymore. All 100% of my credit that I'm spending just goes to business expenses. No way, man. That doesn't even make any sense. Doesn't make any sense. So what? You're not going to have a roof over your head? You're not going to give yourself nourishment and food in your body just because you have a business now? Get out of town. It's not going to happen. And how much time are you going to need to spend on your business activities? It needs to be full-time anyways. You don't have time to work for someone else in the rat race while you're building your vision and your dream for the betterment of your community. We need to maximize the impact of your PMA. Okay? We need to set it up with your not only your business checking account to just store money. It's more than that. It's your credibility builder. It's a silent proof of operational health that lenders use to decide whether to take a risk on you. If you treat your account as a strategic funding fuel in the privates, you can go from too new to approved in a fraction of the time it takes most businesses. This is one of those behind the scenes advantages that the big companies leverage constantly. And now you can too, because now you're aware of how powerful it is to operate in the private. But most importantly, now we need to get into step 3, which is setting up a private merchant processing. Merchant processing isn't just about taking payments. It's about creating a verified revenue stream that lenders can see and trust. Most business owners use public processors like Stripe, PayPal, Square, which automatically report data into network lenders that can access. While this can be fine, it also means your revenue patterns are in a public system where they can be scrutinized negatively. Private merchant processing, on the other hand, keeps your transactions in-house and under your control. With private merchant processing, you still have verified sales history, but it's presented directly to the lender on your terms. This could be a major advantage if you have fluctuating sales or if you operate in an industry that public processors often flag. Consistent merchant activity, especially paired with steady bank deposits, are the deciding factor in getting approved. for working capital loans and even cash advances to lines of credit, trade lines, and so on. Private merchant processing is particularly useful for PMAs because it keeps your commercial activities outside of that public data reporting ecosystem. I'm here to tell you that most lenders, especially fintechs like BlueVine, what's another one? Fundbox, On Deck, they're going to request 3 to 6 months worth of merchant statements during their underwriting. But if you provide private processing statements that show stable monthly sales within thousands of dollars or more, you're immediately in the running for now $20K to $100,000 approvals. Mind blown right there, dog. We're not even at the 10 to 50 now. Now we're at the 20 to 100,000. This is so true with merchant deposits because they match your bank deposits. That's what's creating a consistent and transparent paper trail. But what does Stripe and PayPal want to do? They don't want to accept your business trust. They don't want to accept your PMA because they don't like the privates. You have too many advantages. They can't control you in the private. That's why they don't want to accept your paperwork. That's why we need to get out of their system, man. Another huge benefit of the private merchant processing is avoiding account freezes. With public processors, it's common for accounts to be frozen or held for 90 days if transactions look what they call suspicious to their algorithms, even if it's legitimate. This would absolutely cripple your cash flow and damage your funding chances. If it happens during an application process, you're screwed. Private merchant processing eliminates this risk, keeping your operations smooth and your lender profile clean. Lenders want to see that you can handle money without interruptions, and private processing gives you that edge. To set up private merchant processing, you have to start by coming into Creditor Academy. Okay, we have an in-house service. We make sure to provide you those monthly statements, friendly software, easy to understand step-by-step process, and most importantly, we accept all business trusts and PMAs. That means you can send an invoice, you can have a recurring payment, you can have it connected to your website, whatever you want. And as soon as someone makes a payment with their debit or credit card, it goes right into your private bank account. That is simple processing. Took me a lot to get these connections, these banker connections that see the private as something that they want to back. And I'm here to tell you, I've never met another organization that does that. Not one. Everybody's like, get Stripe, PayPal, Clover, all the rest. So we do have that competitive edge. We'll not only show you how to get the business trust and the PMA set up, but we'll get you the merchant processing. So then we can move in to the next important steps to get you your unlimited credit. Now, in order for you to get your credits, timing is everything in these private business fundings. Funding programs, especially from big banks, are constantly changing. A program that offers $50K to new businesses today might tighten its requirements or close entirely in 6 months. This is why moving fast matters. The world is changing. Cryptocurrency is no longer a future forward dystopian world about digital assets and exchanging money anymore. It's here and it's now. It's already been approved. It's coming where you like it or not. That means that lenders are going to adjust their risk tolerance based on the economy, the currency, the interest rates, and the internal portfolio performances. When they're in a lending-friendly phase, like we are right now, approvals are fast, limits are higher, and terms are better. But waiting too long can mean missing out entirely or having a settle for less favorable options. I'm here to let you guys know right now, guys, we are in a favorable time. AI is getting smarter every day. The crypto market is about to take over, but we're not there yet. Now is the time to get into the private before the new world order system is fully in place. Now is the time to separate your personal liability with existing accounts that you can make today before they start restricting them more and more tomorrow. It's going to become harder and harder. I'm already making steps with Creditor Academy and our organization to make sure that this is planned for before this gets too deep. So we look forward to helping you where we can now and coming up with solutions in the future. But I don't know how quickly things will change. So time to get in is now. But really, guys, I want to say to you that we've covered a lot of proven real-world strategies to structure your private business funding quickly, even if your entity is brand new. These strategies are based on how lenders actually operate, not just generic advice. We talked about using personal guarantees with PMAs strategically and leveraging your PMA account to build that credibility. And also setting up private merchant processing to protect your revenue data and organize your finances that lenders love. But the biggest takeaway is that funding is about preparation and position. If you have the right setup, approvals become predictable. Without it, you're really gambling on every application and hoping for a better future. At Creditor Academy, we specialize in walking you through this exact process, step by step, so you don't have to figure it out alone. Our private merchant services, our PMA setup guidance, and your funding strategies are all designed to keep your results fast and in the private. The opportunity is here and now. Don't wait until you need the money or the line of credit. You can start building your profile today, so when the right program opens, you can grab and seize the opportunity. The sooner you start, the sooner you can sail. Thank you for listening to this featured presentation. We would love to have you as a part of our masterclass. Go to www.creditoracademy.com. Join our masterclass memberships to get access to not only all of this information, but also an amazing community. In addition, we ask you to subscribe, hit the notification bell, and join our private Facebook group, our Rumble, our TikTok, our X channel, and so on, so you can stay connected with our ever-growing Creditor Academy community. I look forward to seeing you all in the next one. It's going to be amazing what we talk about next time. And I look forward to seeing you all once again very soon. Until next time, everybody, enjoy your summer weekend. Amazing. All right. Whew. That was intense.